on a low base though. We have Mr. R.K. Goel, the Managing Director of the company, who joins us on the show. Hi, Mr. Goel. Long time since we had you on the show, so good to have you in. Hope health and everything is fine and you're doing much better. Well, Mr. Goel, talking about the numbers first, on a sequential basis, there was some increase. And as we know, you sell almost all your steel to the auto segment, and it's sold on a contract basis. So how much higher were the contracted prices in quarter one if you compare it with quarter four of last year? And in the coming quarter, what will the revision be?
Good morning. Thank you so much, Mr. Nigel. Now, as far as the price is concerned, in Q4, the prices were much lower as compared to Q1, almost by 6,500 rupees per ton. But definitely there was some impact of cost increase in the last quarter, that is Q1 this year. And that is very clearly seen to the extent our profit has gone down in Q1 as compared to Q4 last year. It is almost 4% down.
Wait, you said 6,500 crore, rather 6,500 rupees per ton was in the first quarter.
No, it was starting from April last year.
Okay.
Initially there was an increase. Then from July and from October there was a decrease. In total, there was a decrease of almost 6,500 rupees.
Okay, but for quarter one, if I compare it with quarter four, what was the price difference? Quarter one, FY24, there was no price. So the prices were as flat as can be.
Yeah.
So this sequential increase that we saw on the revenues, that's because of higher volumes then?
Yes, it is because of higher volume. There will be some, even though we are running plant at 100% capacity, some volume difference will be there because of various reasons between one quarter to another.
Right. We saw a big dip in your other expenses, and as a percentage of sales, they fell by about a couple of basis points as well, a couple of 100 basis points. Just wanted to know, all your cost-saving initiatives, have they finally started to take shape? I mean, what are those cost savings right now?
Okay, first of all, last year Q1, there was a big loss of foreign exchange, almost 14 crore rupees. And that's not there currently. In fact, some marginal little gain is there. So that's what the difference you see in the numbers. As far as cost-saving projects are concerned, by and large, everything is done. Even our coke oven is commissioned. So almost all the current cost-saving projects are already implemented. Now we'll be coming with some more.
So that's about 15 crores odd per quarter, right? That's what you had said.
Yeah. Yeah.
That's played out completely.
Yeah.
So from this quarter onwards, it will be 15 crores. For the year, 60 crores is the savings because of the WHRS as well as the coke oven, right?
Yes, that's what is expected. But currently a lot of dumping of coke happening in the country, which is affecting everybody who is having a coke oven. So when the dumping happens, then the differential between coking coal and coke goes down substantially. And it's no more profitable to produce coking coal, but then everybody needs it. All the large steel plants will have their coke oven, otherwise they can't run their blast furnaces.
Okay, you gave us the price difference between quarter one and quarter four, but for quarter two, how will prices shape up? International prices have been weak, but you're going according to a contract. So quarter two, what will the price differential be in comparison to quarter one? How much are you negotiating with the OEMs?
As far as the quarter two is concerned, there's a lot of cost increase. It is not only coking coal, which has gone down a little bit, but then there is a big increase in ferroalloy cost. You have seen that the way moly cost, vanadium cost, and all other ferroalloy cost, it has gone up. Of course, it has come down a little bit, but still it is much higher. And all our alloy steel and micro alloy steels, these ferroalloys are used substantially. So we are trying that. Of course, the OEs are asking for some reduction, but as far as we are concerned, there is some increase in cost. So there is no question of giving some decrease. But anyway, it's a matter of negotiation between the OEs and steel mills.
Give and take everything, other expenditure, the cost savings, the coke oven that you have commissioned, the bigger, the high amount of imports that you're seeing. Could you tell us what is the margin band we should work with? For the past quarter, it was around 19%. What is the margin band we should look at from here on?
It's a very interesting and difficult question. And answer doesn't lie in India for anybody.
Mr. Goel, only you can give us the answer. So you give us a broad band.
I'm coming to that. The string of complete steel industry is with China. They can pull the string and ensure that the coking coal prices goes up. It is for them to import a little bit more. And same thing is for the iron ore. And like the way they have started dumping even hot rolled coil in the country, that has an impact on everybody. So while we may plan, we can run our plants at 100% capacity, work much more efficiently. But the buying price and selling price is dependent on the way Chinese are behaving.
So let's
It's very
assume.
difficult to say, but definitely we will try to maintain and improve our margins.
And maintain at what level? And improve,
At the current
if at
level,
all, by
current
how
level.
much? Current level is
level,
19%.
Yeah.
19% is what you're looking to maintain it at. And give or take everything else, I mean, irrespective, or if China maintains status quo, 19% is what you can do with some improvement.
Yeah, that's it.
And what's the cash on your books right now? I mean, the last updated number was close to around 600 crores. Has there been a bit of a change there?
Yeah, it has gone down a little bit basically because we have used in working capital.
Okay.
If you see in last 1.5 year, interest cost has gone up by more than 5% as far as we are concerned. And in the process, rather than keeping money in FDs, we have started utilizing in our working capital. So to that extent, it has gone down, and our borrowings have gone down. But we can take out this cash anytime we need.
So what is the number? 400-500 crores? What is it right now?
Yeah, it is around 500 crore.
Around 500 crores. But now all your shareholders, they always say Kalyani Steel is not doing a buyback. You have been paying out good dividends. As a percentage of EPS, the dividend payout is quite good. Any plans of doing a buyback, Mr. Goel?
No, in fact, we are planning, of course, it has taken some time, but we are planning expansion.
Oh, wow. And how much will capacity go up from your current base?
It is being worked out, expansion in what category of the products, what area.
Okay.
We are working out. We have not concluded, but we will do it shortly.
And if I remember correctly, you have the land, right?
Yeah, we have the land, we have water, we have electricity, we have all the infrastructure. We
Okay,
have
so
even
this shouldn't
environment
take-
clearance.
Okay, so this shouldn't take a lot of your capex out immediately. Just wanted to know, I remember there was a plan that you had. You were looking at buying something in the non-ferrous space. What happened to that acquisition?
It takes much longer time, and it's basically the war between Russia and Ukraine is further delaying it. Once we zero down on it, we'll come back.
It's still on, right? You're still looking for it.
Yeah, it is still on. It's still on.
How much is that? 300, 400 crores is what you're looking to buy.
No, it will be very large investment. Very large investment.
Oh, it's
We will
big
come-
investment. Give
Yeah.
us a rough number, sir.
So it's very difficult till we have the
$500
complete
million?
reality.
$500 million?
Yeah, maybe more.
More than $500 million.
So how do you fund that then? I mean,
No, you see, within the group, we will find a ways to fund the project.
So the promoter
That's not
entity
a
will
problem.
back it up and put in some money into
Yeah, we will
Kalyani
find
Steel?
out once we zero down on the investment, we will be able to find out how to fund them.
how
There
close
are
are you to
people-
zero? I mean, just wanted to know, how close are you to zeroing in on something?
You know, you may be very close, but then there is always a gap between the cup and the lip.
By next results, we should hear this announcement.
We are trying for that.
And then we'll be looking forward to speaking to you on CNBC TV18. Thanks so much, Mr. Goel, for joining in. This is something that's quite exciting. Contract revisions, well, for the last 10 years or so, we have been talking about it. But Kalyani Steel looking at an acquisition of $500 million. Mr. Goel, you have got me excited. And in fact, our viewers as well as your shareholders will definitely be waiting to hear more about this.
Yeah, this is in the non-ferrous space itself, right?
No, I'm not saying acquisition. It may be greenfield also.
Oh, it may be greenfield also. Now you're suddenly,
Yeah.
you bowled a dusra
Yeah, it is not- it
when you
not
went
be
ahead to
acquisition.
bowl an off-spin.
It is greenfield. Yeah.
So just to clear the air, $500 million will be spent on a greenfield expansion, not on the
Absolutely.
inorganic growth.
No,
Not on the inorganic growth.
No.
Got it. All right, Mr. Goel, thanks so much for joining in. We had to extend the conversation a little bit, but you got us a little bit excited out there, but we'll wait for that announcement. For the time being, though, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Anubhav Sahu.